Right, morning everyone. Welcome back to Morning Kappa. Happy Friday. Right, so if you look at the S&P 500, well, it rose to close at 6913.36 points on Thursday session as the relief rally continued. Filled the removal of the European tariff threats and also the solid jobless claims data, which signals the resilient labor market. So, you see, tech stocks like Nvidia, Micron, AMD, um, led gains, offsetting the slump in Netflix, as I mentioned yesterday, which fell despite the beating estimates as investors saw on the news. You know, uh, 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 I mean, on the continuous 2026 guidance. So expect some volatility at the open market today, right? I think while the trend is up right now, some of the hot stocks like Apple, Intel, SanDisk remains flat after market close due to the weak outlook, which also could drag down the tech semicon sector. Um, you know, for the at the opening. Right, for the China A50 futures, well, it closed lower yesterday, but a rebound on the evening session as the sentiment, I think, a little bit soured after the Strategic fourth quarter report showed that their ETF holding remain unchanged, disappointing the traders who are betting on the aggressive state buying to support the market after the, I mean before the holidays, right? However, the futures rebounded in the evening session after the BBOC announced a massive MLF operation for Friday, promising an injection of some amount. Uh, uh, yeah, I think for today's session, I expect um, a bullish move at opening, driven by the PBOC injection. Well, as I mentioned previously, at this juncture, we are aiming for the 15,200 or even 15,300 to test this uh, uptrend trend line, right? So yeah, I think moving on to the WTI crude oil futures, so it drifted lower at closing of Thursday to close at 5965 US dollar as the EIA weekly report showed that US crude inventories rose to almost 3 million barrels, signaling that the domestic production is still outpacing the extra demand from the cool weather. So, yeah, however, losses were limited because of the Kazakhstan supply outage. It's still unsolved, and whether the models show that the U.S. Northeast freeze will last another week, keeping the strong floor prices. So, to me, I do expect that the choppy trading for today, as traders position for the weekend, and also there's this data um shows yesterday, that the drilling is slowed down, and we could see um might see the oil price to at least bounce back, right? So looking at the Malaysia market, well, the KLCI uh, jump yesterday to close at 17.14 points on yesterday's session as the investors or the investors cheered that the BNM or the MPC meeting decision to maintain at 2.75 for the um, OPR, right? Confirming that the monetary policy will remain supportive. Now if you look here, the rally was led by the banking heavyweights like Maybank, CIMB, Public, and also some of the names like Press Metal as well as the funds return to risk on mode following the de-escalation of the Europe trade tension. So for the KLCI, do expect uh, the bullish momentum to remain steady. Well, it might challenge higher at 720 or even 730 points today. Yeah, I mean, yeah, to test the resistance. Well, yeah, to test the resistance. Also, we saw that the FKLI went up on higher on yesterday's session after investors kept the positive sentiment for the Malaysia market. Well, for now, we still keep our 1730 and also 1750 points as our resistance and remain our positive trading bias unchanged. So for the sectorial performance day to day, well, most of the sector rebounded yesterday on a better market sentiment, which drove the market, bullish higher. And now, if you see here, construction sector led gains at 1.15 points. So yeah, recently I received a question regarding these two stocks, which is Netgate and also Velasto. So now if you look at this Netgate right here, well, it went up with a bullish Marubozu candlestick yesterday, showing that the bullish is now uh, bullish is now in place, right? So if you look closely, well, it has breached above this downtrend line, signaling that the initial move for the uptrend. Also, the bullish crossover is about to happen right here, together with the MACD indicator has already showing a positive signal. And if bullish momentum to remain strong in today's session and flowing through to, I would say, next week, we might see that it charge higher towards this ringgit 25 cent, ringgit 30 cent, and also ringgit 40 cent if we are referring to this Fibonacci projection tools, right? Also, moving on to this Velesto, yeah, I think one thing that we can't deny is that the overall trend is bullish. So from yesterday's move, it has crossed above uh, the 31 cent level after it jumped from this moving average right here. Also, if you see the volume spike up yesterday, and looking at the technical indicators also, MACD is trending up higher above its signal line, showing that the bullish is now remains intact. So yeah, I think a follow-through move will bring the stock higher towards this 34 cent and also 36.5 cent. Uh, we are using this Fibonacci projection tools, right? Yeah, so this is our watch list for today. Saw some consumer names that might interest you, right? So we highlighted it. And also we have MC Man and also JCY. Right, so for our Malaysia trading stocks, for today, we have JCY International, and the stock is on its breakout formation, higher at this 39 cent level, on a strong volume. So with that, you expect the momentum to keep bullish, right? And the stock able to propel towards the next resistance at 41 cent resistance, followed by this 43 cents resistance level. So if the stock to clear below this 37 cent support, this could this could show that the price is reversing, right? And also we have Malayan cement or M cement, right? So also, the stock experiencing a breakout as well at the 7.80 level. And if the stock to remain bullish, we expect that the price to reach the 8 ringgit and 20 cent resistance level in the coming session, together with high volume. Second resistance is at 8 ringgit and 60 cent. So yeah, again, if the stock to reverse below the 7 ringgit and 40 cent, this could be the attempt of reversal, right? Also, for the um, uh, FCPO, well, it rallied yesterday to somewhere around 4,200 level, as the sentiment was boosted by the strong gains in few other market exchange, right? So yeah, I think this makes the palm oil look attractive relative to its peers. So uh, buying uh, buying pressure was accelerated as traders price in the supply squeeze with January production estimated to fall, which also due to the seasonal factor. And you know that this uh, I mean the first half of January export is raising, right? So the inventories are expected to tighten faster than estimated. So for FCPO, we expect this this price to test the 4,240 today, right? On the better on the positive sentiment. Also, we have I mean, yesterday the price has reached our stop loss, and we have initiated a long position for FCPO and close out our short position for this FCPO. Right. So yeah, for now we have 4240 and also 4,300 resistance, which we are aiming. And for the support level, we are looking at 4,000 and 3,900 for our stop loss. Right. So that's all I have for today. Thanks, everyone. Happy trading, and I see you again next week. So I pass the floor to Jeff. Thanks.
Okay, good morning. We have a company update from Kelington Group, seeing their fourth quarter numbers end of February 25th to be exact. We think it's going to be a record quarter again. Core earnings are expected to increase by 25 to 33% year on year to about 48 to 53 million. This is again a low base in fourth quarter 24. Third quarter, you see a bit of a gap in terms of project execution and completion of projects. So, against that, that number for the fourth quarter 25 should be a good quarter as a whole. We believe the stock share price appreciation still has legs. I think 2025 was a good year. Share price was up more than 20%. Year to date, it's gone up by about 5.8%. 26, I think it's going to be a record year again for earnings. This is basically premised on an outsized tender book. As of the third quarter, the number is at 4.6 billion. It's a record high. If you look at the outstanding order book, as of end September, it's 1.6 billion, also another high. Pretty much the focus will be on advanced engineering jobs, or the UHP jobs, which it is formerly known for. They are basically bidding for a couple of new markets, i.e. Japan, India, as well as the US. I think there will be some positive developments within the CCU side of things, carbon capture utilization. This is one segment that they've gotten into last year. A lot of partnerships are ongoing with steel mills, Petronas, the oil and gas companies, and all that. And I think they will be making some announcements pretty soon with regards to the biogas ventures. They are basically in partnership to basically produce biomethane. This is actually from a source within the palm oil milling side of things. I think this is something that will be quite interesting to look out for. Now, in terms of tender opportunities, the over 4 billion tender book, a lot of this comprises of two big markets here. India is about 1.9 billion. Europe, where they're bidding for the ESMC job, that's about 1.5 billion. Now, I do hear that there could be some downsizing in terms of the Europe numbers. Not to worry. That's really very much a reflection of the competitive bids from the Taiwanese competitors in terms of the base build jobs. Don't forget, they've already won one single big fab contract in Europe, and they're already executing that particular job, which is worth over 200 million. A lot more upside in terms of that work. So the scope will basically increase, and they'll be bidding for additional jobs over in Europe as well. Over in India, I think the Tata Fab is coming up soon. The awards have yet to be announced, but it should be forthcoming within the first half of this year. More leading towards the second quarter, in particular in terms of awards. Also pursuing jobs in Japan. I think Rapidus, which is a government upstart, is basically starting up a fab. Northern part of Japan, as I understand, Micron is also building a new fab there. So Micron is, Kelington's existing customer. They've been with them for quite a while. I think Micron is a biggest customer over in Singapore as well for Kelington. During the third quarter call back in November, they did say that potentially there will be some weakness in the European side of things. That's really coming from, as I mentioned, more competition from the Taiwanese contractors. But nothing much to worry about. I think there are other jobs within new markets that will offset some of the softness there. In terms of the biogas venture, I think the partnership is at advanced stages in terms of discussion, so we should expect some announcements pretty much soon. The stock is basically a beneficiary of the Malaysia's long-term energy transition roadmap. It's more of a story in terms of that the CCU side of things, where they come up with solutions and help their partners try to offset some of the carbon that they produce. So the solution is basically they come up with tanks and all that to capture some of this carbon. It's usually underground tanks, or they'll be doing the transportation part of it, which is really the solutions that they have currently. They are more experienced in terms of transporting some of these gases through some of the pipelines. We're not changing our forecast at this point in time. I think if you look at the 26 numbers, it's basically looking at double-digit growth still. I think 25, you see, them potentially hitting 151 million in terms of core earnings. Pretty comfortable with that. And obviously, fourth quarter earnings that will be announced in February next month will be a pretty good quarter on seasonality. So we're keeping our target price, 610, gives more than 10% upside from here. Maintaining our buy call. Any sharp price pullback is basically a renewed opportunity to accumulate. So I'll stop here for now, and I'll pass you on to Adam.
Okay, sorry, I was muted. Okay, sorry, we have a ground checks note on Kerjaya Prospek today. So we actually visited the showroom of E&O's gallery for the Elmina West project, consisting two projects, Seri Embun and Laman Embun. So Seri Embun is basically a three-story terrace house project, and Laman Embun is a commercial shop lot project. So Laman Embun was launched last year in November, and it was also awarded to Kerjaya during the same time. And Seri Embun was awarded to Kerjaya Prospek back in January of last year, and is expected to be completed in sometime in maybe February or March of 2027. So based on our observations, things are actually progressing well, particularly for the Seri Embun project, which is the landed terrace house project, which includes a clubhouse, which I am showing now. And even at the clubhouse itself, you can see that there has been a row of terrace houses being constructed and completed. And you can see here, these are some of the rows of the terrace houses and some of the scale units of Seri Embun and Laman Embun. And this is the artist illustration of the Laman Embun project. So in totality, in terms of order book contribution, both Laman Embun and Seri Embun make up about 5 to 6% of Kerjaya's 4.4 billion outstanding order book. And this is just from what we understand, this is what ENO has so far in terms of what they plan to do in Elmina. But um, there are also other developments by ENO that should benefit Kerjaya, especially the ENO Andaman Island, which likely has another 10 years time frame to be fully developed, and this should contribute to Kerjaya's job flows. So all in, we think things are progressing well. We maintain buy with an unchanged target price of RM3.35 for Kerjaya. Any catalyst would be if we were to secure any industrial job, particularly data centers and other upcoming revenue streams would come from its 89-acre land bank spanning from Klang Valley and Penang. So that's all from me, everyone. I'll pass on the floor to my colleague, Queenie. Thank you.
Thank you, Adam. So good morning, everyone. Let me just share my okay. So today we have issued a training idea on Kobay technology. So Kobay is mainly engaged in the manufacturing of high precision engineering solution. So the company is established in 1984. The group has evolved into a diversified enterprise with operations across manufacturing, property development, pharmaceuticals, healthcare, asset and investment management, and other supporting activities. Okay, so manufacturing division will remains the core business and main revenue generator or contributor. So manufacturing takes up 63% of FY25 revenue. So this segment includes high precision engineering, metal fabrication, aluminum extrusion, and EMS. So the main customer in this pillar is aerospace as well as semiconductor industries. And then 22% of FY25 revenue come from pharmaceutical and healthcare, which is the activities include retail pharmacy operations under the Park and City brand, and wholesale distribution and brand management of healthcare, nutrition, and supplement products under BioBay. And then they also have property development, which takes up about 6.7% of FY25 revenue. Okay, and then asset and investment management, other operating segments. However, so this is the revenue breakdown, but when you look at profitability breakdown, about 90% of the profit come from manufacturing division. Okay. So the reason why we choose Kobay technology, why we look at Kobay technology is because we think there is an earnings inflection point following the repurposing of Kobay's biggest manufacturing plant in Praia. It transformed it for the aluminum extrusion business to AI server manufacturing. Okay, after it get a few customers in the AI server manufacturing. So so this plant when it's having aluminum extrusion is actually losing money because fixed cost is very high. So now they move out this business to another smaller plant and use this big plant which carry big fixed cost, okay, for this new business, new client, okay. So this will materially improve fixed cost absorption and operating leverage. So following around 45 million investment to retrofit the plant with upgraded electricity, infrastructure, assembly floors, and burning facilities. The site now supports end-to-end AI server manufacturing, including assembly, aging, and testing. Operations have scaled from 2 to 4 assembly lines with near full utilization and a workforce of 500 contract workers. So Kobay provides service only high-level assembly without exposure to component procurement or GPU chips costs, allowing it to avoid low margin, high revenue pass-through models. With 8 burn-in facilities offering 4,500 test slots at any point of time and a 72-hour aging requirement, the plant is approaching operational stability. Okay. So these new AI server clients drive high margin earnings as well as it gives additional earnings to the group. So Kobay AI server manufacturing have a transition from pilot scale to commercial contribution with revenue recognized from September 2025 following initial shipments to its customer, which includes China's largest AI server provider. Order visibility is stable for at least the next 12 months, mainly serving local DC customers for now, providing near-term earnings visibility. The service-only model supports structurally higher profit margin, where you see in first Q FY26, they achieve a net margin of 21% in this business. Okay. So this reinforcing the earnings quality of this new growth pillar. Okay, so we expect this new business to contribute an additional 26% and 31% to its FY26 and FY27 earnings. As you can see in my figure 2, in page 3 and page 4. Okay. So beyond these AI servers, we also see that its existing manufacturing business continue to grow. Okay. In FY27 with order visibility across E&E, medical and aerospace customer remaining strong for the next 6 months. Orders from aerospace customers, which takes up about 11% of the group revenue in first Q, are expected to increase on resilient airline investment in fleet expansion and renewal. Rising memory demand and a cyclical recovery in semiconductor capital equipment spending will support continued growth in Kobay's mechanical and sheet metal orders. So margin is expected to improve with cost optimization and better operating leverage going forward. So we expect the company to turn around in FY26 and assuming that this customer continue with them on the same momentum, as well as no slowdown in aerospace and semiconductor industries. There is continual growth going forward beyond FY26. So looking at this historical 5-year blended forward PE the historical forward PE is at 18 times. Okay. So this is peers, you can have a look. Okay, this is where they are trading at. But of course, this company has different segments. They have local precision engineering, EMS, property, pharmaceuticals. But to be fair, we take the historical forward PE. Okay. So based on an ascribed 18 times PE on FY27 earnings, we derive a fair value of 3.33 ringgit. So key risks to our forecast and of course to the fair value will be loss of key customers, supply chain disruptions, a slowdown in the DC, semiconductor or aerospace sectors, and FX fluctuation, forex fluctuation. But right now they have some hedging instrument on forex. Okay. So all in all, Kobay Technology is poised for a meaningful earnings turnaround driven by the repurposing of its underutilized operation into a high-margin AI server manufacturing businesses. So demand is supported by accelerating AI server deployment amidst Malaysia's DC expansion. This coupled with cyclical tailwinds from the recovering semiconductor and resilient aerospace sectors positions Kobay to return to its prior peak profitability levels. So at just 9 times FY27 FPE valuation, this stock is a steal. Okay. So that's all for me. That's all for me, and that's all for today's morning couple session. Okay. Hope you guys enjoy our session today, and hope to see you guys again next Monday. Thank you.